Good evening, everybody. I'm Ryan Daes, welcoming everyone to the 5th episode of Season 4 of our RFC Tuesday podcast. We started the season trying to help more people understand how to create a resilient investment portfolio for ourselves and especially for our clients. So far, we had 2 episodes where we dwelled more on emerging investment assets like cryptocurrencies and the positive uses of blockchain technology. Then we learned about a new asset class here in the Philippines called REITs, or Real Estate Investment Trust. Tonight, we will go back to basics and learn more about fixed income assets and its relevance to our clients' portfolio. This show is powered by IARFC Philippines, the Philippine chapter of the International Association of Registered Financial Consultants. The IARFC Philippines is an association dedicated to the craft of financial consulting. The association is the sole organization authorized to conduct the RFC conversion courses as well as continuing education in the field of financial consulting. Guys, we received great feedback for our previous episode on REITs with Ms. Marcy Cochet-Chua. People love the idea of passive income and how different REITs behave versus equities and fixed income. But still, the idea of passive income is still a hot topic for most people, which is why we're bringing in a special guest who will be talking about fixed income securities. Kasi ito yung traditional na asset that we all know that brings passive income to most people, di ba? So tonight, we have a very special guest who will be discussing the value and practical use of fixed income assets, of funds, and even funds, especially how it can contribute to particular objectives of our clients for their portfolio. Tonight's guest is the head for special markets and training of First Metro Asset Management, Inc. He's also a professor at De La Salle University, Manila. It's a graduate school of business teaching portfolio management, advanced financial management, securities valuation and research. Ang haba, no? Ang dami pa. Hindi pa tapos. Mathematics of finance, investment analysis, financial calculus, and real estate finance. He also teaches he's also a part-time lecturer at the University of Asia and the Pacific, where he teaches financial economics and advanced mathematics. He's currently president of Capital Markets Institute of the Philippines. So, who better else to introduce us to fixed income? None other than, give him a round of applause, ladies and gentlemen. Let us welcome Mr. Edwin Valeroso, PhD. Welcome, Sir Edwin. Grabe, sobrang mouthful introduction mo. Talagang, sir, siguradong dapat makinig ang mga nanonood ng ating podcast tonight.
Maraming salamat, Mr. Ryan, for that generous at binasa na yata yung aking curriculum vitae. Maraming salamat for that. A pleasant afternoon or good evening. Good day to everyone. So I'm here to present to you this topic about fixed income instruments or securities, including the aggregation of such securities called funds, fixed income funds. So let me share my screen. Pag narinig niyo ba yung fixed income securities, what comes to mind? So if shares of stock are evidences of ownership, fixed income securities are actually also evidences of indebtedness. So those who would like to invest or lend to either the government or the corporation can go through it by buying their fixed income instruments. As I said earlier, long term, we talk about bonds. Short term, we talk about bills or notes. Regardless of whether we are talking about governments or corporations. So fixed income securities would give investors, the lenders themselves, regular income. It's just like a cash flow on a regular basis, whether quarterly, semi-annually, or annually. Those are the regularity of the cash flows being received by the bond investor or fixed income investors. No, they are called uh, coupon payments. Coupon payments. No, so we'll be talking more about that. And as I said earlier, the types of fixed income instruments or securities, two types: no, government and corporates. No, so as far as government securities are concerned, I mentioned again treasury bills, the short-term borrowings of the government for short-term needs. No, and also governments, they issue fixed rate treasury notes. No, normally long-term, 2, 3 years, 4 years, 5 years, 7, 10, 20 to 25 years. No, they offer coupon payments. No, fixed. So it's defined at the outset. No, dun sa dokumento, no, sa call it prospectus, or they call it the bond, indenture, or contract. No, it's indicated there. No, and the main thing there is the coupon rate. No, so how much will the potential fixed income investor or the existing fixed income investors are about to receive or will receive, no, if they will invest in fixed income securities, no, of the government, no. So it's called the coupon rate, no. So aside from fixed rate treasury notes, we also have corporate bonds, no, treasury bonds. Sorry about that. No, it's government securities, treasury bonds, and it's even long term, no, because the literature in textbooks around the world, sometimes they differentiate fixed rate treasury notes. Other countries, other jurisdictions, treasury notes and treasury bonds are one and the same. So it shouldn't confuse you. No? So when we talk about FXTNs or T bonds, we are talking about long-term fixed income instruments. No? The short-term counterpart are retail treasury bills, no? Treasury bills. And for individuals, for retail investors, no, there are also fixed income instruments available to them, and it's called retail treasury bonds. No? Nung araw, meron pang small denominated bonds. No? Really, precisely to give access to ordinary people like us, no, individuals, to invest in government securities and corporate bonds. No? So they offered retail treasury bonds. No? The government issued it. And even up to now, no? A big chunk of the borrowings of the government are actually in the area of RTBs, no? Retail treasury bonds, small denominated, but available to all, even corporates, corporations, institutions, any organizations can also invest in the retail treasury bonds. No? Hindi porke retail pang individual or pang retail investor lang. No? So going back to the other type, no, corporates, no, the counterpart corporate securities, we have there, I mentioned short-term like commercial papers, no, short-term secured because it's the company, no, which issued it, who is the one guaranteeing, no? I mean, to the best they can, no? But there is still a possibility of default, no? So other than commercial papers, we have corporate notes. Could be, the returns could be fixed or floating. So it's reprisable on a regular basis, like every 6 months or every year. And but this is not available on a larger scale. No? It's covered by the traditional 19 lender rule. So it's just like a private transaction or a syndicated loan, no? Something like that. So not open to the public. No? And of course, short-term needs for short-term capital companies, they issue promissory notes. No? I know quite a number of corporations doing that, no? Even up to now. No? So the reasons why do you invest in bonds? Why do you invest in fixed income securities? No? So one of the benefits of investing in this asset class, no, other than stocks, other than different asset classes like what was mentioned by Ryan, REITs, no, or cryptocurrencies, or even derivatives, no, bonds are one of the most, if not the most, what do you call that? The most, the safest, I think. That's that's the superlative word for that. The safest investment asset class, no. So investing in bonds, for example, would give the investor fixed income and via receipt of regular coupon payments, quarterly, semi-annually, annually. And at the end of the maturity uh, date, or at maturity date, no? At the end of the term of the bond, normally ranging, as I said, from 2 years to 25 years. In the US, up to 30 years, no? Treasury bond. So at the end, at maturity date, the investor will receive the par value, which is a bullet payment, lump sum, the amount that you invested at the very beginning. And then other than that, other component of or investing in bonds, no, of income is trading gains, no. Many would say that investing in fixed income securities like bonds is safe, very safe, no. Yeah, that's very true, but also sometimes, and more often than not, especially if you invest in a basket or fixed income instruments, no? Or in mutual funds, in UITFs, whose underlying assets are fixed income instruments. Many of those fixed income instruments, including bonds, are being marked to market. So that makes it volatile. Now, even we say it's fixed income. So they are actually subject to the volatility, to the fluctuation in the prevailing interest rates. That's why crucial, if you will do it yourself, do it actively, crucial is the knowledge of economics, the knowledge of monetary policy, fiscal policy, because interest rates are very much affected by those policies. Later on, we'll be talking about the risk of investing in fixed income securities. Right? And the trading gains, assuming you do it yourself, and assuming also that you invest in a bond portfolio, like a UITF or mutual fund, and some of its components, the fixed income instruments there are marked to market. So there is volatility. And that's why it's also very crucial if you are investing in not just one type of fixed income securities, that it's a basket of fixed income securities or bonds, no? You really also have to do some portfolio management. So there are some principles in the same manner that there are fundamental, basic, or even advanced principles in managing a stock portfolio. Fixed income instruments also make it a bit difficult, you know, for investors, ordinary investors. You know, if they will do the buying and selling of bonds themselves, then they really have to know, as I said, enough, not just a little, about macroeconomics and even microeconomics and business economics. So the movements of interest rates, you know, the cost of money affecting the different corporations, eating up on their net income, therefore bottom line will be affected, pricing of the company itself will be affected, and then the risk of default, you know, may also move, you know, depending on the variables, macroeconomic variables, you know, that are operating. All right, so profiting from a bond means receiving a cash flow, which is what we call coupon payments. No? Coupon payments on a regular basis, and at maturity you receive back your money, and that is what we call the par value, the face value of the bond, no? Or the maturity value. All of those three terms are interchangeable. They mean the same. So at the end of the term of the bond, you will receive such amount. No? So just like other asset classes, there are risks involved. So ano ba yung mga risk involved in investing in bonds, no? In fixed income securities? Investment risk in general, no? Is the event or the chance that you will lose money with negative returns. No? But then, as we know it, investment risk is also not earning the target return. No? Kung halimbawa, ikaw ay employer, no? You have a pension fund for your employees, and for it to be actuarially viable, you should earn 6% per annum. Otherwise, you chip in again, you shell out more cash from corporate funds just to meet the actuarial liability or the correct level, no, of fund at any point in time. And it's being audited, no? By the company's auditor, no? Sufficiente ba yung fund level ng inyong pension fund? So if you're targeting dapat not lower than 6% and you actually earn 4%, so it's a risk. So a risk is not just earning or not just losing money, it's also earning less than what you are expecting or targeting. So there are different risks, no? Associated with investing in fixed income securities. The main and the broadest, no, is market risk. So the rise and fall of interest rates would create an impact, no? For some funds, for some particular securities, fixed income securities, the impact will be significant or substantial. So especially these days, very timely, no? Many central banks are hawkish right now. So when you say hawkish, they're implementing, restrictive monetary policy. So they're raising interest rates to fight and address inflation, rising inflation rate. So it's a domino effect. So when prices of goods and services are escalating, inflation rate will rise. So when inflation rate would rise, the policy rates will be much less than the inflation. There is a big gap. And central banks have to narrow the gap or even close the gap if they can. That's why they would implement a restrictive monetary policy, which is what's happening right now. So they're raising interest rates. Even let's say 0.5% or 50 basis points or 50 bips, they call it, would create substantial reduction in the value of a single bond or a basket or a fund comprising of bonds and fixed income instruments. That's why you would see some bond mutual fund, some bond UITFs, year-to-date performance negative. Parang di maintindihan, akala ko ba fixed income yan, walang risk. They're being marked to market. So when interest rates go up, values of bonds would go down. So it's inversely proportional. So that's market risk. Liquidity risk also. So if you buy, let's say, RTPs that are actually marketable also, if you want to sell it, you need money, let's say RTBs but 10 years, no? So antay mo bang mag-mature yun? Tapos risk mo lang yung, let's say, 6% nung 5,000. Di ba maiksi? Gusto mong i-liquidate na. So you have a liquidity risk. Especially yung mga bonds na hindi tinitrade dun sa secondary market. Yung secondary market kasi, katulad ng stock market, no? Which is a secondary market for equities. Yung secondary market for fixed income instruments is called PDEX, no? That's Philippine Dealing and Exchange Corporation. Doon pwede nyo ibenta yung bonds ninyo. So the portfolio managers are actually buying and selling there. Aside from, of course, no, when there are new issuances, no, they buy, they subscribe. Just like an IPO in stocks, there are IPOs in bonds. So liquidity risk, other than market risk, are the risks that you have to contend with if you consider investing in bonds. Other than that, purchasing power, the inflation risk, your money, because of inflation, these days, many are earning less than the inflation rate. So in effect, they are earning negative real rate of return. Negative. Ang real rate of return, it's the return on your bond or other investment minus inflation rate. So kung mataas yung inflation rate, you earn negative real return, which is practical interpretation, better spend your money because the purchasing power has been reduced or decreased. And supposedly you can buy so much, but because of inflation rate, the same amount of money can buy less. And some bonds would have features, kailangan maintindihan ho natin at the outset, baka merong fine prints dun sa dokumento, ang kapal ng dokumento, prospectus, indenture, merong callable bonds. Callable means pretermination, the issuer, the company, or even the government will be given the option to prepay the investors, the bondholders, and to return their money, not exactly as the maturity value, as a different amount, but more normally it's higher than maturity value. Sabihin nila, okay, i-preterminate na namin yung 10-year bond. Dati, you are enjoying 6% coupon rate. And then, when interest rates are low, let's say 3% na lang yung prevailing interest rates. Now, that option given to bond issuers will give them the right to preterminate, to call. So, pag nangyari yon, babayaran kayo, let's say, 1,000 yung par, let's say 1,050, or 1,100. Let's say after 3 years, supposedly you should be enjoying that until the 10th year, but when terminate, may call feature. So tignan nyo ho yung bond indenture kung merong call feature, callable bonds, they call it callable bonds. And normally, the companies which issue the bonds would exercise the right to call if interest rates are low. Kasi gusto nilang paliitin din yung cost of money nila. So if they can borrow again at 3%, when the prevailing interest rates at that level, 3%, why not? So they will preterminate the 6% bonds, and then they will issue new bonds with 3% coupon rates. So they save a lot. Nakatipid sila ng interest expense. All right, so you realize now, it's not that simple. Investing in fixed income securities, not straightforward. It's not riskless. It's relatively compared to stocks, it's a little bit less risky, but the risks are there. On top of what I said, there are also risk of default. The issuer of bonds, the corporations or even government sometimes, so very, very few times, very rare. But corporations, there is a chance, a risk of them defaulting. So ibig sabihin, hirap na hirap sila, let's say pandemic, yung cost of money ang taas na, and there are other, other factors like input cost of their manufactured goods, are so high, thinning margins or corporate earnings, and sometimes when there are payables, when you look at their liabilities, let's say plenty of them are having high coupon rates, and the revenue portion, the income statement are not really that good, and the probability of not paying, let's say the coupon payments or even the maturity value. So that's a default risk. That's why crucial to investing in bonds and fixed income securities is the credit quality of the issuer. Titignan ninyo may risk ba? Baka mabankrupt? Baka hindi na makabayad kasi mas malaki yung outflow sa inflow. So, tinitingnan din yun ng mga bond experts, ng bond portfolio managers, no? And those, even individuals who are investing directly in bonds, no? And they are planning also to sell that in the secondary market in PDEX, no? And the call risk that I mentioned earlier, no, meron siyang medyo kahawig na risk called reinvestment risk. No? So, when a bond, normally, tignan ho ninyo, no, may mga call feature. Baka hindi ninyo alam. I'll show you some of them, no, actual. No? Reinvestment risk. So, when you receive the amount, the proceeds of the call, and normally, as I said, the call feature is exercised by the issuer when interest rates are low. So natanggap na ninyo yung proceeds ng inyong loan, ng inyong bond prematurely, more than its par. Now, you can invest it in lower interest rates, lower prevailing interest rates. So it's a reinvestment risk on top of the call risk. So let's look at bonds and commercial paper ratings, no? That's why important yung rating, no? Or yung capability ng bond issuer, fixed income instrument issuer. Paano ba yung ability niya? I mean, is it a good company in such a way that it can fulfill its obligation under the contract, no? That contract of indebtedness or lending on the part of the bond investor, no? So yung ratings na tinatawag, yung ratings na yon actually is just a measure of the ability of the bond issuer, no? As to its ability to pay the coupon payments and the maturity value when they fall through. So good thing that there are third-party rating agencies doing that. I mean, for the investor's sake, no? They're protecting the interests of the investing public. International rating agencies would include yung kilala nyo na yung Standard & Poor's, no? Rating agency, meron ding Moody's, rating agency, and they rate every bond. Registered, ha? Hindi naman yung mga bond not registered with the Securities and Exchange Commission, no? These are bonds registered that went through the very tedious process, no? Of registering a bond, borrowing money from the public, in effect. So investment grade, we have junk bond ratings, no? Investment grade, yung si Standard & Poor's, no, would have, for example, AAA, no, AA or single A. So AAA yung highest, no, and then Moody's would also have the same ratings, no, AAA then, but they use lowercase letters, no, in combination with capital letters also, and then in general, and this is the accepted convention, those bonds or other fixed income instruments rated BBB and above, up to AAA, are classified as investment grade instruments or bonds, no? And those C or double C and D or lower are junk bonds, no? So junk bonds. So the proverbial, the higher the risk, the higher the return also holds when you invest in bonds, no? Palagi yung you cannot defy that rule, no? If you want more return, then be ready to assume more risk and vice versa. No, there's no such thing as free lunch, no? Sabi nga nila, no pain, no gain. That's similar, no? So kung gusto mong high returns, then you can get it from not so good rating, no? Of a particular bond. Kasi normally, sinong kumpanya mangungutang, tatapatan niya, let's say, example lang, let's say, ano bang mga blue chip companies like Meralco bad, let's say, and then merong XYZ band, new kid in the block, hindi kilala. Startup company. So, mangungutang din. Mangungutang for their long-term big projects. No? And para mapautang itong XYZ new company, no? Of course, it should entice the potential lenders, the bond buyers, potential bond buyers, by offering high interest rates, high coupon rates. No? Because comparing the risk, it's much riskier to invest in that XYZ company, in my example. And Meralco, being an established company, for example, AAA rated always, can offer you, the investor, a lower coupon rate because they are safer. Their bonds are rated AAA. So it's less risk, lower risk, therefore lower return. So that's how it is. In the same manner as you classify stocks into blue chips, into speculative stocks, into small denominator or small capitalized stocks. The same also holds true in bonds and fixed income instruments. In the Philippines, we have the counterpart of Moody's, Standard & Poor's. And the other one was Fitch, international Fitch rating agency. In the Philippines, we have Phil Ratings. See, Phil Ratings, they are rating short-term instruments issued by corporations, and also long-term instruments issued by corporations. So they have two different sets of ratings. Parehas din yun. Merong investment grade, merong below investment grade, merong junk bond ratings. So it also follows that fundamental principle in investing, the higher the return, the higher the risk, and vice versa. And you will be given liquidity if you invest in bonds, if you can sell it, if you want to sell it via PDEX, PDEX, Philippine Dealing and Exchange Corporation. I think I mentioned this already. Not only long-term government securities and corporate bonds, including treasury bills, including treasury bills. So if I may share with you the slides, this is a very recent capture of a table in PDEX, corporate issued securities. Very recent. Medyo mahirap, cluttered, for some siguro, baka ang dating parang mahirap naman i-interpret yan. Parang sinasabi lang rito, I mentioned about bonds being traded, being marked to market. At any day, at any time, the value of your bonds is changing, depending on the demand, depending on the supply, depending on the interest rates, depending on the news, depending on central banks, depending on the monetary policy, depending on what the war in Russia, in Ukraine, and the prices of oil, including the prices of commodities. Parang sasabihin nyo, anong kinalaman yun sa presyo ng bonds ko? Malaki ang kinalaman. It's a domino effect, which I mentioned earlier, yung epekto. So for example, dito, corporate issues. Meron ditong Ayala Land, nag-issue. Coupon rate, 6%, then days to mature or number of years to mature, 11.47 days. The coupon rate is 6, and then now it's being sold. You want to buy this, you buy it at discount. So it's at a discount. So you can buy it at a discount. There is also an open, high, and low. There is a bid and offer also. So sabi ko nga sa inyo, tinitrade din ho yung bonds. Dito pumupunta yung mga portfolio managers ninyo sa mutual funds, yung ITF, variable universal life, and other managed or pooled funds. Or you can do it yourself. As I said, if you want liquidity, you go to your broker or go to a bank. Kung saan kayo may account, you sell it. Sabihin nyo, I want to sell my bond. I want liquidity, I need money. I cannot wait until it matures 10 years, 7 years from now. No? So ito ho yung magpo-provide ng liquidity. So the rates here, the prices, they keep on changing every minute, no? Every minute. So parang stock market din ho yan, no? And other than corporates, yung mga GS or treasuries, no? Treasury bonds, government securities issued by the government. This is, for example, this slide, no? Showing us the different short-term securities T-bills, no? RTBs, 91-day T-bills, 182 days T-bills, and 364-day T-bills, no? Pinapakita rito yung days remaining until the T-bill will mature, no? Merong 6 days remaining, merong 69 days, merong 103, 104 days remaining, and the yields are there, no? There's an open yield, a high yield, low yield, and the close. Parang stock market. Merong bid and offer. So, binibid yan at a discount, binibid yan, binibenta naman yan, offer at a premium. So, there should be a matching between bid and offer. And I said earlier, bond analysts would do some calculations and research, valuation technique. How should I know that this bond is being sold for a discount? If it is a good buy, or is it potentially a good buy? No? So you have to do valuation. So medyo technical nga, sabi ko nga ho. But if you want to learn how to do it, you can do so. No? Konting math lang ho yun. But if you don't want to do it yourself, sabi ko, there's a way. No? Give it to the experts. Give it to the funds. No? And also, the shorter fixed income instruments offered by the government, T-bills, and the long-term government securities, treasury bonds, and treasury notes. So here they are, FXTNs. Some would mature katulad nito. Ito yung actual na binibenta ngayon. At binibili na kaya yung bilhin, na pwede yung bilhin. No? Merong 19 years to go, merong 10 years to go. Ito yung mga yields. The yields given here, yung last column, yun yung YTM, yung yield to maturity. Ano ba yung yield to maturity? If you buy this bond, you will receive the coupon payments, and at maturity, you receive the par value. So, computin niyo yung ROI ninyo, taking into account the time value of money, the ROI is actually your yield to maturity. Yun yung jargon nila. Ano bang YTM yan? If I were to buy that and stick to it until it matures, and after I receive all the coupon payments in effect, what's my effective yield? And that's the YTM. Yun yung kanilang term, YTM. So, if you sinasabi rito, for example, FXTN 2510, 15 years to go. If you buy this now, let's say, how many? 1 million worth, no? You will earn 6% as effective yield. That's your YTM, yield to maturity. After you've taken into account the coupon payments and you receive the maturity value, the effective return, it's the ROI, and the technical term is YTM, yield to maturity, is 6%. So do you want to buy it? Would you like to earn 6% per annum for the next 15 years? Paano kung mag-akyat ang interest rates later on? Kaya nga, meron dun eh. Ipapako mo na ba for 15 years yung pera mo at 6%? If you wanna hold it until maturity. But then again, good thing we have PDEX, no? Kung mag-akyatan ang interest rates, you can sell it. But, as I said, when interest rates go up, values of bonds would go down. So you will sell it most probably if you want liquidity at a discount. Lugi. Kaya may nalulugi. Kaya yung iba di maintindihan, nalulugi. FX income to eh. They are forced to sell. The portfolio manager forced to sell because interest rates are rising. So they want to take advantage of the rising interest rates. So they want, kaya nga yung iba, yung assets nila, composition ng bond portfolio nila, malaki yung cash. especially these days when there are uncertainties in inflation and interest rates. No, um, they want to diversify in terms of tenor. No, walang masyado dun sa long term, wala dito sa short, medium, sa belly portion ng yield curve. This is a short, kargahan natin kasi nga very volatile. So pag merong opportunities doon, magmamature itong short, then you can take advantage and buy that newly issued bond with high coupon rates. So that's how it works. I don't really expect also that everyone can capture that at the very start, no? But ganun ho yun, merong parang kakaiba. When interest rates go up, the value of your bonds would go down, no? And vice versa. Okay, so let me continue. Yung tanong, saan ba tayo makakabili ng bonds, no? Nasagot na partly. Yung tanong naman na, yung newly issued bond, balita ko mag-i-issue si Ayala, no? I can see, these are recent transactions or to be offered, no? Ayala Corporation will issue fixed rate treasury bond. Kailangan nila ng 10 billion up to 15 billion for their whatever projects, whatever intention, no? To retire some debts, no? To expand, no? Or to acquire another company or to acquire a competitor and so on. Disclose naman yun, no? So the indicative rates, no? They offer 3, 5, and 7 years maturity. So in this particular case, hindi pa ito na-offer sa public. Issuance nito May 26, 2022, for example, no? And right now they're setting the rates, no? Book building. So for 3 years maturity, they are offering 4.58% gross per annum. So merong final withholding tax 20%. 5 years, no? 5.7% to 6.1%. 7 years, 6.3% to 6.8% gross. And you receive coupon payments every quarter, every 3 months. No? And there is a call option. Andito, let's say yung, I hope this is shown on the screen. No? Let's say Series E 7-year, no? 102. Ibig sabihin, no? Yeah, it will be called, but the payment, the proceeds will be equivalent to 102% of the par. So remember, it's not good for the bondholder because it's pre-terminated, no? It can be pre-terminated, but the bondholder will be paid a premium of 2% on top of the par value or maturity value. And in the pipeline, or not in the pipeline, just recently, SM Prime Holdings, no, Ayala Land and Toyota Financial Services issued fixed rate treasury bonds. They generated substantial amounts, no, 15 billion SM Prime, no, and the final rates, this was done already, and it was issued last April 22. 5 years would earn 5.6% gross or 4.49% net. 5 years, no? Is that good for you already? So you have to decide, no? Can you match that? Can other investment asset class or instruments match that? 7 years, 6.11 gross or 4.89% net. This is a 10-year bond, 10-year fixed rate treasury bond. So because the others are floating rates, no? they change. No? But normally, all of these are fixed rates. No? Those that you see in PDEX are actually, more often than not, fixed rate. So we call options. So watch out for that. No? And what else? No? So you can go to your bank. Normally, you should open an account. No? You can go to an investment house. You can go to an online stockbroker. Yung ibang stockbrokers ngayon, nag-o-offer na ng bonds for sale. Nag-o-offer, very few. No? I know of one, First Metro Securities. No? they offer to the public, no, retail, no, retail, not just stocks, not just mutual funds, also bonds and other fixed income instruments, no. Or you can go to an investment house like First Metro Investment, BDO Capital, and RCBC Capital. So they are authorized GS dealers, no, and fund houses also. Indirectly, fund houses or investment company advisors or asset management companies like FAMI, SLAMC, like CAMSI, like um, ATRAM, like they offer fixed income instruments or bonds indirectly via mutual funds. No? So they offer fixed income mutual funds. They offer fixed income or money market fund. So either dollar denominated, peso denominated, or euro denominated. So that's how you can buy or newly issued, including secondary. Secondary, mas makakabili kayo. The chances of you buying or selling through PDEX, no? Philippine Dealing and Exchange Corporation. So different fixed income securities would have different terms. You have to know them in terms of the minimum face amount. Sabi ko nga sa inyo, 200,000 kalimitan, no? Kaya yung mga retail, no? Sumasakay na lang sa mga fixed income funds. No? That's the way to go, as low as 5,000 pesos. And additional 1,000 nga lang. And yung ITFs also, no? Are there precisely to give access to retail investors to access the bond markets. No? The rates are there, the price are there, computation of interest disclosed, no? The coupon payments, or how often, the frequency every year, quarterly, semi-annual. But fixed rate treasury notes always issued on a semi-annual coupon rate. No? 20% final withholding tax. Liquidity by PDEX. No? When you decide, no, to buy now, you have to settle that. You have to pay one day after. So T+1. Hindi pwede bumili kayo tapos i-withdraw nyo pa pala after 2 days yung fund. No? O magkaka-fail trade yan. No? And the PDEX, the trading hours run from 9 to 12. May break ng 12 to 2 and then resumes at 2 to 4 p.m. So kailangan, just like opening an account with a stockbroker, you also open an account with the financial institution, no? Who will do it for you. May mga fees. Normally, they charge 10 basis points of the face amount, no? Plus, no? Plus. So just like investing via stockbrokers, investing in stocks, no? Merong stock transaction tax, merong documentary stamp tax, may commission, meron din po ganong components ng expense investing in fixed income instruments. No? All right, so this is an example of a typical money market fund. No? So if your intention for your money is short term, let's say you will use it after a year, no? Or even less than a year. Let's say this is for your down payment for your house, which will happen 6 months from now, or this is for the tuition fee of your child, no, next semester. Then you can diversify, and you might want to consider putting your money in a money market fund, a portfolio of short-term fixed income instruments. So ano ang laman, no? Rather than you doing it yourself, no? Timing when to buy a particular fixed income security and selling it at a particular time and at a particular price, then you can leave it to the experts who manage money market funds, no? Like this one. So for example, itong money market fund na ito, nag-i-invest sa short-term GS, so T-bills lang, yung cash and cash equivalents and other short-term debt securities like US dollar, Philippine peso notes, no? Time deposits, even in some banks, not necessarily universal banks, but of good reputation then, no? Um, and then in terms of maturity profile, so being a money market fund, the outlets. So lahat ng mga investors, pera ng investors na nalikom itong money market fund, ini-invest sa fixed income securities with tenors less than or equal to 365 days or 364 days, less than 1 year. Kaya nga tinawag na money market fund. It's short-term money. Now, if you can afford to lock in your money for a longer period of time, let's say this will be for your retirement, and you don't want more volatility of the stock, cryptocurrencies, or Forex, or even NFTs and real properties, then you can invest your money, or you might want to consider a fixed income bond fund, or fixed income fund. For example, this one, this is a true existing fund, tinatago ko na lang ho ang pangalan, but look at the portfolio. So it actually fulfills its name, fixed income fund, long term, not just short, kasi money market na yung kabila, if it is short, like tenors here would be like 10 years, 5 years, or even shorter than that, and they are diversified in terms of the different companies, different issuers. All right, so there are many options. Now, assuming, let's say, that you are decided, or at the beginning, sabi nyo, mahirap pala mag-invest directly. Direct securities yun, ang tawag. Mutual funds. Matingnan nga ang mutual funds. So, can you give us, let's say ang questions, can you give us examples of bond portfolios or fixed income portfolios? So this slide shows us the different fixed income portfolios. These are fixed income mutual funds classified into money market funds and bond funds. So shown here, for example, are different money market funds: ALFM Money Market Fund, First Metro Save and Learn Money Market Fund, Manulife Money Market Fund, Sun Life Prosperity Peso Starter Fund. So by the way, the source of this table is Call Financial, and then you will see there the numbers, Ano yung NAV-PS, Net Asset Value per share. So kung kayo mag-invest, for example, sa ALFM Money Market Fund, 131.71 pesos per share, or per unit, or per share. This is per share. These are mutual funds, per share. And year to date, so far, ang kinikita nitong example lang ho ito, na kung nakikita niyo yung screen ko, 0.38% from January 1, 2022 to, I think, this one, May 2, 2022. That's the latest available data. And the 1-year performance is indicated, the 3-year and 5-year performance are there also. And andito yung ibang disclosures, Like yung standard deviation is a measure of volatility. It's a measure of risk. Kapag nakita niyo yung matataas na numbers under standard deviation, yun yung risk. The higher the standard deviation, the riskier it is. And then, isang consideration investing in mutual funds and other managed funds or pooled funds is the management fee. Mataas ba siya? And higher than management fee, yung total expense ratio, which includes management fee and other expenses. So the higher the expense ratio, the lower will be. Not at all times. Kung magaling naman yung portfolio manager, kahit mataas yung expense ratio, kaya niyang kumita ng malaki. But all things constant, the higher the expense ratio, the lower will be the net returns. Kasi mas malaki yung ginagastos. Binabayad sa auditor, binabayad sa portfolio manager, binabayad sa administrator, sa NAV-PS computer, binabayad sa taxes, board of directors, per diem, and so on. Yun yung total expense ratio. And you also look at the fund sizes. So malalaki, this is in billions, no? So dito makikita niyo yung mga malalaking kumpanya, malalaking mutual funds, malalaking portfolio managers, no? And below this table are mutual funds, no? That invest in long-term fixed income securities. They are classified as bond funds, no? So the likes of, again, ALFM, Atram, First Metro, Manulife, no? All of them. So good thing that Call Financial gives this to us. No? If you have an account with them, no? Dyan yung kanilang YTD, year-to-date return, and dyan yung mga expense ratios, yung risk, standard deviation, and so on and so forth. No? So at the end of the day, you ask yourself, kano bang kinita ko rito sa fixed income instrument na to? So there are three measures of yield that you really want to know. From the very beginning, yung makikita ninyong coupon rate, yun yung nominal yield. No? Let's say 6% per annum. No? That's a nominal yield. Hindi naman yun yung actual nakikitain ninyo. Yun lang yung coupon payments. So let's say 1,000 denominated bond at 6% coupon rate. Means you earn 1,000 times 6, that's 60 pesos. So 60 pesos over 1,000, that's your nominal yield. Yung current yield is the coupon that you receive also. In my example, 60 pesos divided by, not the par, but by the market price of the bond. That's a current yield. Ang analogy niyan sa current yield, that is the dividend yield. It's the dividend yield. And the YTM, itong YTM is a combination of the current yield and the capital gains yield. No? That's the effective rate, the YTM. So that's the overall rate, no? The total return investing in fixed income instruments, particularly bonds. No? And we know that the coupon rate, hindi yan pareha sa current yield, hindi the same yan sa yield to maturity, just to make it clear. No? And then, one very basic thing or knowledge to know is when interest rates go up, your bond values would go down and vice versa. That's why very difficult in investing in a bond is really anticipating the direction or even the extent of an increase or decrease in interest rates. Kaya kailangan medyo more than enough economics, macroeconomics in particular. And you will listen to Jerome Powell. You have to listen to Governor Ben Jokno, no? And so on. So if you are to do it again, you have to make not a research, but you have to look at economic news, the monetary fiscal policy, what's happening to the inflation rate, the political environment can also affect the riskiness of bonds. No? In a risky country, for example, those companies issuing bonds there are actually riskier. That's why they issue a premium. No? They issue higher coupon rates compared to a more stable country. So the monetary policy would have an impact on the level of interest rates, on the coupon rates, and on the value of your bond. So be ready to know that, and you should know that, and be ready to accept the repercussion of a particular movement, no, in the monetary and fiscal policy, including money supply, no? The supply of money, which is part of the monetary policy, one of the levers, or one of the what do you call that? The things that they can do to siphon excess liquidity or to inject more liquidity. It depends, no? Precisely to address inflation, to curb inflation. That's really the main thing, no? The open market operations, ang tawag nila doon sa central bank. So kung masyadong maraming supply of money, the excess domestic liquidity, yung M3 na tinatawag natin, babawasan yan by selling government securities, no? And that particular action is part of the restrictive monetary policy. Marinig niyo palagi yan, nasa news, ng balita, minsan tatanungin si Governor Jokno, ano bang position ho natin? Are you hawkish? Right now, sabi niya, mukhang hawkish. Because the other countries are hawkish. The other central banks are hawkish, especially the US. Jerome Powell, the Fed, no? Hawkish. They just increased 50 basis points, the policy rates, and then they have some more increases. So if you know what's the impact of that, then you should prepare well. No? You should, kailangan mag-encash na ba kayo? Kailangan bang mag-shift kayo? I-diversify niyo ba? No? And that also holds true to a portfolio manager. No? They should know that. No? They should know that. And one indicator, a bit technical for some, is the yield curve. The shape of the yield curve. Sometimes it tells us a lot of things, no? Sa ibang jurisdiction nga, yung mga researchers, yung mga investment bankers in the past, by looking at, observing the shape of the yield curve, or the term structure of interest rate, yung tawag nila. Yung pag dinugtong-dugtong ninyo yung mga interest rates, connecting the dots of the different tenors, that's the yield curve. Now, yung shape niyan, minsan flat, minsan sloping upward, no? Very steep, minsan nagpa-flatten yung curve. And they indicate a lot of things, very important things, including recession, including stagflation. Many countries right now are into that, stagflation, stagnant growth in the economy, but rising inflation. So it's not good. It's not good for any country. It's not good for bond investors, especially if you're already locked in some fixed income instruments. So that's why you also have to diversify, no? And now, anong dapat ninyong gawin, no? If you, as I said, want to do it yourself, then you should learn how to do fixed income fund portfolio management. Paano kayo para kayong stock portfolio manager then? But this time, you are referring to, and you're managing fixed income instruments and bonds. Importante sa bond at sa mga bond portfolios or funds, yung duration. Yung duration is a bit technical, but in layman's terms, yun yung weighted average maturity ng bond portfolio. Ang rule dyan is the higher the duration, the riskier the fund is. Let's say sinabi sa inyo, itong ABC Money Market Fund, duration 4 years. Ano ibig sabihin nyo? If the duration is 4 years, now you can compute that. And many fund houses, they disclose their duration. Pag 4% ho yung duration ninyo, let's say si Mr. Jokno said, we will increase policy rates by 1%. Pag umakyat ng 1% yung policy rates nyo, yung bond portfolio nyo na may 4 years duration will decrease in value, equivalent to 4% of the aggregate value of the fund. So yun ho ibig sabihin ng duration. Kaya yung iba, ngayon, especially there are volatilities, uncertainties in the direction and levels of interest rates, many fund portfolio managers are diversifying, or many of them are actually shortening their duration, because high duration means high risk. So na-mention ko na, what if, let's say, 50 basis points, and your duration is 4? 4 is okay na rin, no? On the average, then the value of your portfolio will decrease by 2%. To talk about 1 billion, no? If you're a portfolio manager of a fixed income fund, 1 billion, what's 2% of 1 billion? It's substantial. And your reputation will be on the line, no? Bakit hindi niya na diversify, hindi niya na manage mabuti yung bond portfolio. So duration is crucial, and just for us to know, parang behind the scenes, ginagawa ng mga portfolio managers ng bond funds or ng fixed income instruments, they do active portfolio management. Some are doing passive. So active, their intention is they want to beat some benchmarks. They want to beat some bond indices. Let's say yung 5-year, dati merong BPI, 5-year bond, or yung 5-year BVAL, Bloomberg Value, no? Index, or other blended index. No? Meron silang guide na kailangan nilang i-beat para i-disclose nila sa public. Now, this mutual fund will try to beat this index or this benchmark. And that's active. So how do they do it? Different combinations of different portfolio strategies, management strategies, tactics, research, and even more than that, more activities. So some funds are very passive, no? Merong bond funds, passive portfolio strategy. Like they just stick to the buy and hold strategy without marking to market the portfolio components, no? So ganun lang. Yung iba naman, somewhere in between, like a big chunk of the portfolio will be invested in safer, let's say, government securities, that 80%, yung 20%, paglalaroan nila active management. So it's a core, there is a core, 80% government securities, 20% will be managed actively. All right, so when you invest in a fund or in a bond, look at the duration. The longer the duration, the riskier it is. That's another takeaway. No? And I mentioned about the different portfolio strategies. Some of them are aligned just to copy a particular index or do a passive management style. Many are trying to beat a particular benchmark or index. No? So at the end, they will be judged. No? How did they fare? No? Paano ba sila? Some measures of performance is risk-adjusted returns, no? Like Sharpe ratio. Even some mutual funds, equity funds, balance fund, bond funds. No? Yung Sharpe ratio, the higher the Sharpe ratio, the better it is. No? Kasi sa Sharpe ratio, taken into account also is risk. No? Not just the return. No? You're not just after to earn high returns, but you also have to take into account the risk. So it's a balance between the two. At the end of the day, you will be judged what is your Sharpe ratio. That means, hindi ka lang mataas, but na-manage mo pa yung risk. So it's an optimization process. Maximize return, minimize risk at the same time. So that is reflected in the Sharpe ratio. So all fund managers will be judged according to that barometer, that benchmark, that risk-adjusted return measure. So yun lamang. So that's what it takes, no? To invest in bonds, no? To invest in fixed income securities. And there's so many variables, there's so many moving parts. In the same manner as there are plenty of variables and moving parts in investing in stocks and other asset classes.
Thank you, Sir Ed. That was a very good, practically lecture about fixed income.
Ang haba na masyado. Putulin ko lang.
Okay lang, sir, kasi ano naman it's very informative. So, actually, sometimes these are the things that the public should know kasi akala nila ganun kasimple na mag-invest sa fixed income security. Why not leave it to the experts, ika nga? Even for some financial advisors, they think that going directly to the market is the best option, but looking at things, ang dami mo palang kailangan silipin or tignan before you invest in such assets. So it might turn out that investing in a fund is more efficient. But of course, to each his own. Depende kung ano yung priority talaga tsaka yung size nung kayang i-invest, di ba, sir? So just to make sure na siguro medyo na-cover natin rin lahat ng dapat malaman, no, sir? So, ngayon ba, sir, may idea ka ba kung ano ba yung average na rate ng mga fixed income securities? You mentioned about coupon rates Di ba? Yun kasi yung kita ng fixed income security. Ano po ba ang average coupon rate na binibigay ngayon ng government?
Depending ngayon, no, right? Siguro the past few days, let's say 91-day T-bills, no? Nasa 1.25% per annum. That's gross, no? Kung gusto mo 1 year, 1.88, no? To be exact, no? The past few days, that has been the offer, no? So, wanna take that or not? Minus 20%. Kung 5 years, ang laro ngayon, may mga nag-o-offer 3.05% gross. Merong nag-o-offer 7 years, 5.8. Sa 25 years, parang nakapeg sa 6, 6.05, 6.04 gross for 25 years, no? Yung yields ng 25 at 10 and 20 hindi nagkakalayo, hindi nalalayo sa 6% gross per annum. So, yan yung kalakaran ngayon, yan yung prevailing interest rates at different tenors, no? Offer ng government, no? And of course, isa pang kailangang malaman, yung mga interest rates or coupon rates ng mga corporate bonds, yung counterpart ng government, mataas because in general, riskier yung instruments ng in-issue ng corporations kasi mas risky yung company, even blue chip yan. Kasi yung gobyerno, probability of default, magpiprint lang ng money yan or may tax collecting ability.
Or may powers to collect taxes para pambayad. No,
pambayad. Pag yung korporasyon nahihirapan mag-default, so hindi na mababayaran yung maturity value at saka yung coupon payments. So, palaging mataas ang coupon ng corporate bonds kaysa sa treasury bonds. So, yun yung kalakaran ngayon. Yan yung sinabi ko mga rates. And ngayon, tataas pa to. That's the trend. Kasi nga, tumataas ang inflation and any government should address that by raising policy rates. Ang basis ng interest rates are the policy rates. Sa Philippines, matagal na nga yung pre-pandemic pa, 2%. Pati yung reserve requirements sa mga banks, no? Kailangan itataas din nila yan. So ngayon, currently very low at 12%. For so many years now, pre-pandemic then, our central bank governor was able to maintain it at that 12% reserve requirement. So hindi niya pa, but the second half of the year, he said that he will be raising interest rates by 50 basis points, 0.5%.
Yung bang coupon rate ng bonds, are they indicative of an economy strength or weakness? Kumbaga, if interest rates are high, is that good for the economy? Or if interest rates are low or coupon rates are low, is that good for the economy?
It's actually in general not good for the economy when interest rates are high. Interest rates are high because of they're catching up with inflation rate. No? So they're narrowing the gap between interest rates and the inflation rate. So para maging maganda yung ekonomiya. Yun at the level of corporations, sa corporate world, pag mataas ang interest rates, mataas ang inflation, hahabol ang interest rates. Yung interest rates, the basis for lending ng mga banks, no? Lenders and yung mga korporasyon sa manufacturing industry, even sa service, when they borrow money, they borrow at a high rate. Pag mataas yung rate ng loan nila, mataas yung interest expense. Mataas ang interest expense, kakain dun sa revenues and income, bababa yung net income. Baba yung net income, baba yung earnings per share. Ayaw ng mga analysts nun, ayaw ng investor yung ibibenta yung stock nila. Babagsak yung price. So it's a domino effect, really, yung inflation rate. No? And minsan, sabi nila, may mga sectors na nakikinabang sa mataas na interest rates. Sabi nila, yung banking sector, kasi assuming, let's say, hindi bababa yung loan portfolio nila, in an era of high interest rates, they can lend money at higher interest rates. So their net interest margin, the names would be thicker, no? The spread will be thicker, and they earn more. Kaya recently, nag-declare na ng income, yung BPI, BDO, and Metrobank. So very, naman din, satisfactory. Because partly, because of that, no? And other sectors also would benefit from that, like, on a negative way naman, the opposite, the property sector, no? Pag umakyat ng interest rates, dahil hinahabol yung inflation, yung mga mag-housing loan ay mababawasan kasi yung housing loan, mataas ang interest rate, so madi-discourage yung mga pamilya, no, na mag-avail ng loan, no? And therefore, yung benta, yung inventaryo ng mga property companies, andun, marami pa rin, mahina ang benta, mahina ang kita, bababa ang presyo ng property companies, no, listed companies. So it's really a domino effect. Now, it depends anong sector. Sometimes yung tinatawag nilang business cycle, nasa ang stage ng business cycle, yung timing ng rise and fall in interest rate sometimes will affect the company positively or negatively. So, yun yung mga hindi uniform ang impact. Iba-iba, and iba-iba sa timing, iba-iba sa sector, iba-iba sa industries.
Just to wrap things up, normally at this point, one of the most important part of this podcast is talking about practice management, which is one of the prime objectives of the IARFC Philippines. And siguro, if it's okay, Sir Edwin, we would like to ask some tips from you on yung practical application ng fixed income. Although you mentioned a lot already, siguro magbigay lang kayo ng konting guidelines on how we as financial advisors can use fixed income, knowledge about fixed income securities in helping better our clients.
Gandang tanong yan, no? Ryan. Yun nga, just like in other asset classes like stocks, no? Alam naman natin as financial advisors, no? Palagi nating tinatanong, ano ba ang objective ng investment? Yung tao mismo, yung bibigyan natin ng pieces of advice, no? Ano ba ang time horizon niya? Yung tenor, ano yung time horizon? Anong nature ng fund? Anong target returns? So always will boil down to that. And as far as fixed income instruments are concerned, maibibigay mo yung dapat. Kung pang-retirement yan, it can afford to lock in, let's say, a substantial amount o yung kanyang mga future contributions sa mga long-term fixed income instrument like treasury bonds and corporate bonds. No? Ngayon, kung pang working capital, let's say, ng isang kliyente na mayroong business, and hindi kailangan 30 days, 60 days yung money, rather than putting such amount in a savings account or andun lang sa vault nila, di ilagay na sa money market fund o money market instruments, supposedly would earn higher than time deposits, including the bank rates, no, savings rates. So magbo-boil down din yon sa ano bang risk appetite, no? Hindi lang stocks, pati sa bonds. Anong risk appetite ng inyong kliyente, ng taong may-ari ng fund? Kung kaya niyo bang mag-invest sa mga second liners na borrowers, yung below investment grade in terms of credit quality or credit rating, kaya gusto niyo bang kumita ng malaki? Ito ba for long term and it can afford to absorb more risk than the usual? Pag long term kasi, hindi ba, alam naman natin na okay lang sometimes that we can take additional amount of risk kasi long term, pwedeng kung hindi maganda yung resulta, meron pa tayong oras para makabawi. Pero if you are nearing retirement, your client is nearing retirement, I think, between the two asset classes, stocks and bonds, alam naman natin dapat i-offer natin bonds and fixed income instruments. And not just the mark-to-market bonds or those that are highly, volatile when interest rates change. But siguro, natin yan. Papayo ko, bumili na lang kayo ng nearing retirement a 5-year bond, fix, and hold to maturity na yan o hold to collect. So you collect coupon payments and then 5 years after, you get your money back. Or pwede rin naman yung fixed income fund, UITF fixed income fund or mutual fund. At least yung sinasabi nating diversification, ginawa na ng mutual fund manager o yung UITF manager, no? Para sa atin. Ang importante lang talaga, know the client's objective, know the time horizon, and yung profile ng tao, risk profile. And everything will be all right. Hindi kasi one size fits all. So it's a bit customized to every investor. No? Even in the fixed income world, no, that holds. No?
Thank you very much for your generous time, Sir Edwin. We learned so many valuable insights on the role of fixed income assets in building a truly resilient investment portfolio. So guys, we still have 2 more episodes on equities and hedge funds. So we'll see you again on May 24. That is the 4th Tuesday of May. So we have an RFC public course. Please do see the details on our screen. So it's being posted right now. And I would like to remind everyone of your membership renewal, especially the RFC members. For your membership renewal, please do contact Ms. Arlene Baguyo at iarcph@gmail.com, or you can contact her to 0917-645-7846. So please do contact her for your membership renewals. Our podcast episodes are shown every 2nd and 4th Tuesday of the month. That is why it is very important to follow us on Facebook. Episodes are pre-recorded and are broadcasted through Facebook Live. On behalf of our executive producer, Ms. Grace De Vera Escobar, this is the RFC Tuesday podcast saying,
it is better to be in the know than to be the last to know.
Thank you everyone. Good night. Stay safe. God bless. Thank you, Sir Edwin.
Thank you also, Mr. Ryan. Thank you, everyone.